Hi, I'm Lisa Leiter. In Chicago Business Today, Northern Trust. Northern Trust stock jumped last week on a report that HSBC may make a $65 a share offer for the Chicago bank. Northern Trust, of course, would not comment on the report, and it's not the first time there have been rumors swirling about a possible takeover. And this comes after the company's chief executive said earlier this year that Northern is actually considering acquisitions of its own after years of growing organically. I sat down with Crain senior reporter Steve Daniels to talk more about Northern's future. So Steve, Northern Trust officials have made it clear in the past that they're not interested in selling, but if the right offer comes along, can they refuse it? What would shareholders have to say?
Shareholders would be potentially upset if they turned down an offer that was at a big premium to their stock price now, and that's the real tension for the management and the board of that company. On the other hand, they can look at their earnings today and say these are trough earnings. These are the lowest they're going to be over a period of time. This is not a good time to sell. It's as if if you own a home and the value of your home is way low, that's not the best time to sell. You want to wait until the value improves.
Sure. What are analysts saying about this most recent report out of Britain about HSBC making an offer?
I think analysts are not dismissing this. I mean, these reports have been very speculative. There's been, little, but very persistent, kind of unusually so. And analysts are not poo-pooing it. They're saying, yeah, this matchup would make sense on paper. There's a reason why they might be interested. Northern Trust makes a very alluring takeover target and has for years and years.
You mentioned those earnings that you say are at a trough. They were down 17% in the third quarter, certainly trailing some of Northern Trust's bigger rivals. What do you think, if they're not bought, the company needs to do to boost earnings and to boost its stock price, which is really where it was 12 years ago?
Well, we should be clear. They're not really trailing their bigger rivals. All of their bigger rivals are having the same problems Northern is. They're just bigger, so they're harder to buy. Now, in terms of what Northern needs to do to improve its earnings, things it doesn't want to do. It doesn't want to take more risk on its balance sheet. What they could do more of is some acquisitions. And to date, coming out of the financial crisis, they haven't. Doesn't mean they haven't been looking, and they say they have been.
And what kinds of companies would they be looking at?
Well, they could be looking at similar companies to them that are smaller, wealth management type companies that would put them in markets where they're not today, that they want to be in, like Washington, D.C., some of the Eastern Seaboard markets that they're not in now. Also, acquisitions overseas for companies that process investments for big institutional investors.
If there were a takeover at any point, what would that mean for the Chicago business community here?
There would be a bad response to that. I mean, Northern is the only large Chicago bank left. We've lost First Chicago, Bank One. We've lost LaSalle. They're sort of perceived as all that's left. They're a big civic contributor. They've obviously got a storied history in this city. It would be a blow.
Okay, Steve, well, we'll be watching this story in the months to come. Thank you.
Thank you.
And that's this edition of Chicago Business Today. For more on this story, be sure to check out this week's print edition of Crain's and chicagobusiness.com. Thanks for watching. We'll see you tomorrow.